I liked the Andy Griffith Show when I was growing up. One of my favorite parts was when Gomer would come in and he would say, "Surprise, surprise, surprise." You know, surprises can be both good and bad. And when it comes to taxes, unfortunately, most surprises are bad. So what I've learned over the years working with my clients at my first job in helping clients manage the taxes is to eliminate those surprises. The chief bad surprise, if I can say it that way, is when the client doesn't have enough money to pay their tax liability on April 15th. This doesn't mean necessarily that the client is broke. More often, it was spending the funds that should have been set aside to pay the taxes on April 15th. Let me give you an example. Let's say we have an S corporation that's made $100,000 more in profit than it made than the previous year. Cash has increased $75,000, so money's in the bank. The owner has paid his taxes based upon the previous year. So he has paid taxes, but he's going to be short because his income's up by $100,000. Let's say that he's in a 30% bracket. That means he's going to owe $30,000 on the $100,000 additional profit. He's got an extra $75,000 in the bank, let's say, at the end of the year. But what he does in January, he goes out and buys a piece of land that's adjacent to his building. Pays $75,000 for the land. Now, when April 15th comes along, guess what? Doesn't have the money in the bank to pay the taxes, nor does he have the money to pay the first quarter for the current year. So what he's done is he's gone out and he spent money that should have been earmarked for taxes, and now he's facing that bad surprise. So over the years, I've learned as a CPA that my job, first and foremost, in helping clients manage their taxes, is to eliminate the surprise. This particular person could have eliminated that surprise with some simple tax planning and a projection. So here's my advice to CPAs out there. Be proactive in working with your clients. Call them up. Get them in there. Get them in there for projections. Not just at the end of the year, but stay informed. Keep taxes before them all year long so they don't forget about it, so that they don't spend money that should have been earmarked for taxes and be short come April 15th. And here's what I would say to those of you who are in business. If you don't have a CPA who's being proactive, who communicates with you, and who helps you eliminate the surprises, maybe you need to find another one who will communicate with you, work with you, help you to manage taxes by eliminating those surprises.